Stock Markets for Beginners Part 2. In this part, we're going to talk about the various types of stock, what the stock market is, what stock brokerages are, and the various stock market sectors. You're going to understand a whole lot more about the stock market after this section. Also, while you're at it, check out the various offers linked down in the description for things like free stocks. And if you want even more information, join our exclusive Patreon linked down below. The different types of stock. There are, believe it or not, different kinds of stock. Now, the most common one, you guessed it, is common stock. Basically, this is the one that most people are referencing if they say, I bought or sold a share of this company. It's typically common stock. Now, common stockholders get one vote per share of common stock that they hold, and they get their portion of assets, profits, and ownership in the company by holding their shares of common stock. And then we have preferred stock. Preferred stock still represents ownership in a company, but it has some pretty major differences. They usually don't have voting rights like the common stockholders do. They usually include a guaranteed fixed dividend. So a dividend is the amount that is paid out to stockholders. With common stock, that is not guaranteed. That is not guaranteed whatsoever. With a preferred stock, it's kind of like a coupon that is paid out on a regular basis based on a percentage of the total amount that you invested. Also, with a preferred stock, in the event of liquidation of the company, let's say it goes bankrupt and they just do an asset sale. They sell everything they have and try to convert that to cash and pay off debts. A preferred stockholder would be paid out first before a common stockholder. And also, the company has the option to purchase back preferred shares at any time. And usually if that happens, the preferred stockholders get paid more than what those shares are actually worth, generally for the inconvenience of having to sell it, maybe if they didn't want to. And then finally, we have classes of stock. So companies can customize any of these criteria that we've talked about, from ownership, voting rights, dividend yield, you name it. They can tweak that and create different classes of stock. Now, not all companies even have different classes, but this is an option. A common example, or a more popular company that has classes of stock, is Berkshire Hathaway. They do this because their main BRKA has never done a stock split, and because the company has grown so much, the stock is hundreds of thousands of dollars per share. And they wanted to make this a little bit more accessible to the everyday stockholder. So they came out with a Class B stock that is 1/1500th the price of the Class A stock and has no voting rights. So that's one common example of a class of stock within a company. Moving on from here, what is the stock market? Getting back to the basics. So the stock market is a collection of markets and exchanges where you can buy, sell, or issue shares of a public company. So stock exchanges are the markets within the stock market. And these are the three major stock exchanges within the United States. We have the Chicago Board Options Exchange, the New York Stock Exchange, and the NASDAQ. So when you think of the stock market, you can kind of think it's like a market of markets. So let's say there was a grocery market, or you could say almost say the grocery industry is anywhere that you could buy food. And then a grocery chain would be like one of these stock exchanges within the grocery market. That's how you can think of the full stock market and the exchanges within that market. Moving on from here, what is a stock brokerage? A stock brokerage is the middleman that connects buyers and sellers of a stock. And here we can see I'm buying one share of Tesla from Meet Kevin. And I drew this earth. I drew that. If that's not worth a like on this video, I don't know what is. Now let's talk about the different kinds of stock brokerages. The first one is a full service brokerage. This is where a professional financial advisor manages all of your investment decisions, and they are there to answer any questions that you might have along the way. You pay a little bit more for this kind of service. Some examples here are Charles Schwab, Raymond James, and Fidelity. All offer full service brokerage services. And then we have discount brokerages. This is the most popular version. If you're thinking of a stock brokerage, this is generally some kind of discount brokerage. So this is a platform that allows just your regular everyday investor who wants to manage their own money, they want to buy and sell shares on their own, that allows them to do so. It's an open marketplace, and typically they offer $0 trades. Some examples here, again, are Charles Schwab. They offer the full service or discount, whatever you want to do. Webull, which I have linked down below, you can grab some free stocks with Webull. Robinhood, also you can grab some free stocks down there. M1 Finance, more free stocks down there. You have tons of options when it comes to discount brokerages tons of places to go, but you might as well go with one that gives you some free money along the way. And then we have robo-advisors. This is kind of a newer type of brokerage. This is a platform that offers investment management services, but it's carried out by algorithms and AI, not an actual person who's looking at all the numbers and deciding where the money should go. So it's a lower cost version of full service. Some examples here that are pretty popular are SoFi. Vanguard has some options for robo-advisors, Betterment, and there are tons of other options with that as well if you're interested. Now let's talk stock market sectors, in which there are 11 of them. So let's talk about each individual sector just very briefly as to what it encompasses, and then give some company examples for each and every sector. The first one is industrials. This is businesses that generally use heavy equipment. We're talking railroads, airlines, and trucking and logistic companies. Some examples here are Southwest Airlines and Union Pacific. Next up, we have energy companies. This is oil and gas industries and businesses that provide equipment and services to oil and gas industry. Some examples here, ExxonMobil, Chevron, BP, you get the idea. Next up is materials. They provide goods for manufacturing and building. Some examples here are Nucor, which is a steel manufacturer, Cemex, which manufactures cement, and DuPont, which manufactures all sorts of stuff. Next up is utilities. You can guess what this one covers. Any basic utility, including electricity, natural gas, water, you name it. Some examples, Consolidated Edison, American Water Works, utilities. Next up is financials. These are the money handlers. This is banking, insurance, brokerages, anyone who is like a middleman facilitating the transaction of money. Some examples here are Wells Fargo, Aflac, Chase Bank, and Bank of America. Next up, we have consumer discretionary. Now, this one isn't quite as intuitive as the others, so this is defined as non-essential goods and services. Typically, consumer discretionary industries fluctuate with consumer income. The more income consumers have, the better this sector does. The less income, the worse the sector does. A good example here was COVID. Consumer discretionary was hit especially hard during the COVID pandemic. And these can be low-cost items that aren't technically necessary, or luxury items. Some examples here are McDonald's, Disney, and Ford. Next, we have consumer staples, kind of the opposite of consumer discretionary. This is essential goods and services. Demand does not typically fluctuate on this sector with income or the necessary state of the economy because it's things that people need to buy either way. We have here food, hygiene products, and household products that fit within this criteria. Some examples are Coca-Cola actually is part of this, even though you might think that's not a necessity. They're part of it. Walmart and Procter & Gamble. Now, with Walmart and Coca-Cola, you might be thinking like they could potentially fit within a different sector. And yes, there is some gray area here where you could shift a company from one sector to another. They're just not perfect. It's hard to fit every single company into only 11 different criteria. Next, we have information technology. This is companies involved in technical innovation. Some examples here are Apple Computer, Dell, Dropbox, tech companies. Next up is communication services. This is telecommunications like cell phone providers and media and entertainment providers. Some examples, AT&T, Verizon, Viacom, CBS, entertainment companies. Netflix would fit in that as well. Real estate, this is the next sector. REITs are included here, real estate investment trusts. We're going to go in a little bit more in depth on that later. And real estate development companies, some examples, Simon Property Group and Crown Castle. And then finally, we have healthcare. This is pharmaceuticals and biotech. Some examples are Pfizer and Teladoc. So there you have it. Part 2 is complete. In part 3, we're going to talk about dividends and stock appreciation, how you actually make money with stocks. This is important stuff that you do not want to miss. So make sure you like this video and subscribe to this channel for future updates on all things finance and stocks and news that makes you money. And if you want even more content, make sure you join that Patreon down below. See you in the next section.